Welcome, ladies and gentlemen, to Commodity TV, and it's time in the new year. And of course, happy to new year to all our viewers. We want to get an update from Caledonia Mining, the successful gold producer out of Zimbabwe. And with us here is Mark Learmonth, the CEO. Good morning, Mark. Happy New Year to you also.
And Happy New Year to you, Jochen. Good morning to you.
Thank you very much. Yeah, great that you've taken the time already that early in the year. That's super. I'm a shareholder of the company, of course. I have to conclude that first. And also, thank you very much. I saw the dividend press release already. So I'm happy on, I think 29th January is the payment date. That's fantastic. As many years you are doing that, and it always pleases me. First of all, Q4, before we come to your latest, how can I say that, to your latest big buy you did with Bilboes. But Q4, how was it so far? Are you happy?
Yeah, very happy. We'll be formally announcing the 2022 production and Q4 production. I'd have thought sometime soon. We're just waiting for the final refining results, just to make sure there's no discrepancy between our internal records and what comes from the refinery. But it's fair to say, I mean, people should know that we've been producing at a rate of 20,000 ounces a quarter or 80,000 ounces a year for several quarters now. So there should be no surprise about our ability to achieve our target of 80,000 ounces a year. But news on that will come in the next sort of week, I'd have thought.
Super, perfect. And also maybe on a short side note, I saw in the last quarter that you also started to generate your own power with the solar panel.
Yes, we did. That project has been, as you know, we've been running on that project for a couple of years. It did unfortunately get quite badly affected by COVID, both in terms of the availability of solar panels from China, and then the ability to ship those panels from China to Zimbabwe. And so that did introduce a delay. And then there was another problem with the contractor. But that started producing in early December. And I've got to say, it's actually exceeded our expectations in terms of production. So we're very, very pleased with that. And it's helped enormously in terms of improving the quality of supply, reducing the outages, and obviously solar's cheaper as well. So we're very pleased with that. But I must say, actually, the way the Zimbabwean authorities have responded to their electricity problems is actually quite impressive. They've really embraced the private sector, and they're now allowing major users like ourselves to import power directly from places like Zambia and Mozambique, where there is a surplus of power. So I'm hopeful that actually power will be in the rearview mirror as a problem for 2023.
Fantastic, super. And I think ESG-wise, it also helps a lot for the balance sheet.
Yeah, absolutely. Yeah, absolutely. Yeah.
Super. So let's come to your latest press release, which you just issued this morning. You have Bilboes now fully bought, and I'm sure you are really happy. That's the future of the company.
Yeah, it really is. As we say in the press release, it really is the cornerstone for our strategy to create a mid-tier Zimbabwe-focused gold producer. So Blanket is running at about 80,000 ounces a year, and that's a stable, cash-generative, major brick in the wall. But Bilboes adds substantial scale. As you know, there's a feasibility study prepared by the vendors, which indicates a potential for about 170,000 ounces a year for 9 or 10 years. And that is, substantially bigger than where we are at the moment. And just those two assets together, Bilboes plus Blanket, takes us to about 250,000 ounces, which is now a very substantial producer. It is fair to say that we will now start our own feasibility study. It's quite likely that we won't go to 170,000 ounces in a single leap. It may be that we choose to do a phased approach. And that's really to minimize equity dilution, to make the funding more digestible for us. It also reflects our experience of doing stuff in Zimbabwe. It's quite difficult to do big stuff quickly in Zimbabwe. So look, that's going to be a work in progress that will probably take the next 12 to 15 months. So yeah, Bilboes is a very important step for us, and I'm very, very pleased that we've got it.
Fantastic. So if you say you're doing this in two steps or two stages, let's call it like this. So would that mean that you have like the possible ounces? Let's say that you say, okay, maybe we start with something like 80,000 ounces
Something
a
like that,
year.
yeah. I mean,
Yeah.
that will all come from the feasibility study. There's no point in building something that's too small to start off with, because then it doesn't have critical mass.
Yeah,
So
exactly.
really, it comes down to the pit designs and
Yeah.
optimizing the pit designs and doing it. And frankly, Jochen, the way we look at this is we look at this purely through the lens of maximizing NPV, or cash flow, per share, per fully diluted share, because that's what we're not interested in. We're not interested in chasing gold production for the sake of chasing gold production.
Yeah.
So if we double gold production, double the shares in issue, we've not gone further forwards. Yeah, so we want to increase. So that's our guiding principle, is to optimize NPV, cash flow per share.
And just a rough estimate, I know it's way too early to say that, but what would that cost a production for an open pit in Zimbabwe for 80,000 ounces? Just an idea, 50,
I'd have
100 million.
thought something, it would certainly be three figures, it would be more than 100 million. I'd have thought a lot closer to 100 million than 200 million. So I'd have thought 100 million, perhaps a little bit more than that. That's our working estimate at the moment. But clearly, this all gets confirmed in the feasibility study.
Yeah, absolutely. But would you do that all with equity? Because it sounded a little bit
No,
like...
don't forget. We've got cash coming out of Blanket Mine.
Exactly.
We've got also, don't forget, we're starting work on the oxides at Bilboes. I'll talk about that in a moment. So we get cash flow coming from the oxides. We would like to take on some debt, but not much debt. I mean, I think we're probably on the same page with you in terms of our fairly conservative approach to debt funding.
Absolutely.
And so, look, it's all about minimizing the equity dilution. That's what it's all about. And we'll look at every source of funding that's available to optimize that NPV per share. But I would say we've never really given investors a sort of sensible, structured opportunity to invest in Caledonia equity. We've never really done that, and it would be appropriate, I think, to on a structured basis, to create an opportunity for institutional and private sector investors to actually get onto the register in a regular way.
Yeah, and then join the dividend party.
Yes.
Okay, super. I saw also in the press release that by March you already wanted to start some small gold production. So can you explain it a little bit more clear?
This is from the oxide. So let's be very clear. The main prize, the prize of Bilboes, is to create a large gold producer exploiting the deeper sulfide material through a series of open pit operations. It is the case, though, that for many years this Bilboes has been producing gold by exploiting the oxides, which is very shallow, the sort of surface component. They've stopped doing that temporarily because they didn't have the capital to go slightly deeper. We do have that capital, and so what we're doing right now is we spent last year, I think, a couple of $1 million buying equipment. That equipment is being mobilized right now. We expect to start putting oxide material onto the heap leach early February, and then we're confident that the heap leach will start to generate modest amounts of gold from March onwards. Now, clearly, there's no feasibility study for this because it's only a sort of a departure. It's a little sort of diversion away from the main story. But I think the point is that we have to move this material. It's sitting on top of the sulfides, and we're in a position whereby we can actually monetize that. We can actually make a virtue out of a necessity. We can actually turn this stuff to account, and so that will help to boost our cash flows over the course of the next 2 or 3 years.
Okay, wow, super. So that sounds like a super game plan, but I saw also in one of your press releases by the end of last year, you have also bought Motapa. And I think that looks to me like a hidden gemstone because it is even, I think, a little bit larger than Bilboes, but it is really directly on the border to Bilboes. So this is the future of the future.
Yeah, it is. We are very excited about the combination of Bilboes and Motapa. We think in due course will be very, very powerful. Motapa, we think, has the potential to be even bigger and higher grade than Bilboes. We have seen some historic drill results. Unfortunately, this is very old drilling data. It's not currently capable of meeting current reporting standards. But we are quietly confident that Motapa will be the big brother, the big twin to Bilboes. And so what we have to do now, we're going to focus in the short term. We're going to focus on Bilboes. We're buying that. We bought that. Let's turn that to account as soon as possible. But in parallel with that, we will need to devote some resource to identifying to actually show the investors what's there at Motapa and convert our sort of confidence to reality. So we're very, very excited about that. And that could be a real first world, first class combined ore body. Very, very attractive.
But it would be also open pit, right?
Oh yes, open pit. Yeah. Oh,
So,
a series of open pits, not one vast big. Well, maybe we do one vast open pit, but that's the feasibility study will drive that. But yes, open pit at this stage.
So would that mean that you build at Motapa also like a processing plant, etc.?
Probably not. No, because it is from pretty much. I think if you're a decent golfer, you could probably drive a ball from the Bilboes, the site of the Bilboes met plant into Motapa. It's so close. There is every scope for those to be a single large scale operation.
So like a hub and spoke.
Sorry, like a what?
Hub and spoke. Hub and spoke.
Yes, absolutely.
Okay. But I would say that is really fantastic, because when you have Bilboes online and really producing, making a lot of cash, you can easily say in Motapa, let's drill 10, 15, 20 million dollars and then rock it for the next 5 years, I think. Yeah. Okay, super. Wow, that sounds like a fantastic plan, honestly. I really like that. Last question here, also from the projects. What's going on with Money Green?
Marley Green, there's nothing wrong with Marley Green at all. We like it, but it has now moved down our list of affections, put it that way. So it will continue. We will continue to do some work on it, to have some presence on the ground. We'll continue to do some sort of drilling. But really, it's been overtaken by Bilboes and Motapa. So that now is probably our main priority is to keep Blanket running at 80,000 ounces, and potentially, if we can find more resource, increase Blanket's production. Then it is Bilboes. In parallel with that, get some exploration going at Motapa, and then I'm afraid poor old Marley Green sort of falls behind those. But there's still nothing wrong with it. It's a lovely asset. It's a very, very attractive asset. But I think it's all about prioritizing.
Yeah, let's put it that way. You must have something also which you can develop in 7 or 8 years.
Yes.
Yeah, who knows? So to me, it sounds like that you are on the path, let's say, to a 300,000 ounce producer by now, but it could be also like 400,000 plus in the future, I count Motapa in.
Yeah, mid-tier is anything for me is anything between 250 and 500. Actually, there's a lot of work to be done over the course of the next sort of few years to identify that resource base, and then actually to get down to the difficult business of building and running these mines. But over the course of the last 12 months, by getting our hands on Bilboes and Marley Green and Motapa, I think we've created the foundations for a really very substantial business in Zimbabwe. And it's fair to say we had a sort of a formal opening ceremony of the central shaft in November. The President Mnangagwa visited the mine. Absolutely blown away by what we've achieved in Zimbabwe, and very, very supportive to see Caledonia be at the forefront of developing the Zimbabwean gold sector further, for the benefit not just of shareholders like me and you, but also for the government in terms of royalty receipts, tax receipts, and employment as well. We employ a lot of people. We pay them very well.
Yeah, and those families behind, they benefit also. That's important. Okay,
yeah,
super.
We can make a massive difference here for our shareholders, and also for Zimbabwe.
Super. If I wrap that up all together, is your target then for the future production, let's say Bilboes and also Motapa, then also to achieve something like below the $1,000 per ounce AISC mark?
Oh yes, yeah. Now temporarily, because processing the oxides at Motapa will be somewhat high cost. So temporarily, that may adversely affect our short-term all-in sustaining cost. But the core business, the blanket business, then in due course the Bilboes business, and then the Motapa business, they will be low cost. I would be just so blanket historically has already been running at way below $1,000 an ounce in terms of all-in sustaining cost. I'd be disappointed if Bilboes wasn't even cheaper.
Okay, super. So that would mean in 4 or 5 years, maybe we can see also a different dividend.
Of course. That's Welcome. That's exactly, as I say, we run this business to optimize DCF and cash flow per share. That's exactly for the purpose of in due course increasing dividends. That's the only reason for doing this.
Love to hear that. Fantastic. Mark, thank you very much. It was a great roundup and start for the year. I think you have a ton of work to do, but this is all very, very positive. And I would say keep it going, keep it running. And I look forward then hopefully to do a site visit later in the year, because I really would love to see that.
Of course. No, of course.
Super. Fantastic, Mark. Thank you very much. All the best and a good start into the year.
Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was Mark Learmonth, the CEO of Caledonia Mining. You know the company, the successful gold producer from Zimbabwe. Now they bought Bilboes really finally for approximately $65 million, which I think is a fantastic price for both sides. And with Motapa, in addition, direct running to the borders of Bilboes, that would be probably something like a hub and spoke production in the future. But also what I like is the phased approach, because it puts not the company on too much financial risk, and you can already start to get some cash flow and then develop the things further. My feeling is that we are here in front of a multi-million ounce new two projects with multi-million ounce potential that really looks like to me if I look at the historical data. And so I'm a happy shareholder of the company. Dividends are coming on 29th January. Again, as always, quarterly. Don't forget that until we wait for the big next move here with the production and building the production. So great company, great story. Thanks for watching us, and bye-bye.